Hi, this is Mohan Kumar from Brady Bulls, and I welcome you to another episode of Nifty chart analysis using the Triple Threat Intraday Strategy. And in this video, let's take a look at the Nifty chart for April 24th, 2023, and see what kind of entry and exit signals the strategy has given. So let's get into the chart. So you're looking at the two-view chart in the trading view platform. So we have the Nifty Spot and the Nifty Futures chart set to a 3-minute time frame. So before we bring the indicators on, let's look at the price action. So the Nifty gap opened, and post the open, it had a quick fall, and then it consolidated right at this place after the fall, right? And it kind of formed a double bottom right here, and then the price had a quick move to the top, and then it consolidated right here, and then again it moved further higher and it closed higher, right? So it was quite an interesting price action. So I guess everybody's wish should be to capitalize on this particular move, right, which is right here. Excuse me, let me quickly move this for a clear view. Okay, sometimes this happens, and I keep mixing the freeform indicator with the cursor, right? So this is the move that I was talking about, which everybody wants to capitalize on, right? And there are a couple of small trades that you could have taken. So one is right here, and another one is right here, towards the end of the day, right? So let's quickly apply the indicators and see, what kind of entry and exit signals the strategy has given. So let me quickly, remove the drawings right here. Okay, and you're on this particular chart as well. And I'll bring on the indicators. The first indicator is the location, right? And the second indicator is the market participation. And the third indicator being the trend meter, which talks about the how strong or how weak the trend is, whether it's consolidating or it's bottomed out or it's peaked out, right? The green zone and the red zone, respectively, right? And so we actually put everything into perspective, and then we alongside with the price action pattern and the chart analysis, right, the candlestick pattern, we then take trades based on the signals. That's why this strategy is so powerful, because it is not completely relying on one particular indicator or a concept. Rather, it is a mix of multiple concepts, right? And that's why this is very unique, and the entry and exit signals are quite accurate. And this strategy is the mother of all strategies that I have formulated in the last 10 years. And so, what this, according to the strategy, let's see the price action pattern. The price opened above the previous day high. Gap opened above the previous day high. So if the price slowly retraced back to the previous day high, and then it would have if it would have consolidated, and then if it would have taken off from here, then that's a total different game altogether. But that did not happen. Rather, the price swiftly moved further below the previous day high, uh, and now the price is caught between two major locations, which is the central pivot range and the previous day high. So we have seen in other videos, when the price is between two major locations, and if it is part of the EMA band, it may tend to consolidate for a while, right, before it could make a strong move either to the down or to the up, right? And in this case, the price started consolidating around the CPR within the EMA band, and there was not much of a participation, as you could see, right? Again, uh, there wasn't any participation, right, in this particular area, right, when it consolidated. There was barely any participation. And as you could see, the trend meter was slowly moving to the top, indicating that the trend to the upside is kind of like, it's weakening, right? Because there wasn't any considerable price action or significant move to the top, but the trend meter firmly moved to the top. Now this is a weaker price action to the top, and the moment you see some participation coming right here, this is the place where you can be assured that the price is going to move firmly, either to the upside or downside. We'll only get to know if the price breaks this particular candle's high or low. So in this case, there was a participation and the price broke this candle's low, and that's exactly the reason why we had this fall back to the previous low point, which is right here. right? So we know this is a very strong location, right? Central pivot range, and it's also kind of a double bottom right here. So this all indicates, and look at the trend meter, it firmly moved even lower compared to the previous low point, where the price did not move much lower than the previous low point. So it's kind of a price trend conflict, which now indicates that the move to the downside is not that firm enough. And now, because of the location of the price is likely to move higher. And since we do not have enough participations here at this particular zone, we need to actually look at this particular candle right here. So let me quickly, remove the drawing so you could clearly see the candle that I'm referring to. Okay, so this candle right here, which had a lot of participation, right? So this candle's high is going to be a significant one because considering the location of the price, considering the trend meter, the price is likely to move higher. And this is the candle which is going to be key. If this candle's high, is broken, that is where we take our, take a long trade. We get the call options, right, and we trail this trade. Okay, as long as the price is above the green moving average and the trend meter, reaches the red zone, we will hold on to the trade and take profits. So that exactly happened. So this candle closed above this particular candle with a lot of participation, and this exactly is where you could have taken a trade with stop loss being right below this particular candle and entry being right above this candle, and such a great move to the upside, as you could see, right? And we could have trailed the stop loss to the green moving average. See, even though the price is in the red zone, right, the price is firmly moving to the top. It broke the previous day high, and you could actually trail a stop loss below every big candle with a lot of participation, right? So this is the first place where you could actually move your stop loss, and then again the second place where you could move your stop loss, right? And then the third place where you could move your stop loss, and right here you could have exited your trade. So this is exactly the trade as signaled by the strategy. Entering right here post a major participation candle was broken, the trend meter was quickly moving to the top, and then a beautiful trade to the upside. Okay, and the price consolidated post this great move. We know that the EMAs are moving higher, right? You could see how the EMA band looks like. So there isn't much participation at this zone, right? And for the price to move below this, it needs a lot of participation. It needs a lot of force. No, it cannot steer through the EMAs without any kind of participation, right? So there is no short trade right here, even though the trend meter indicated that it has actually peaked out. Since there is no participation, we do not go short at this point in time, but rather we wait for the price to retrace back. And the trade for the day is like trade along with the trend. If the price dips back to the moving average, in this case, the blue is a strong moving average. And look at the trend meter; it dipped almost to the midway, but the price did not move, lower, right? It was sideways. So this indicates a weaker, move to the downside, and the price is likely to move higher. And that exactly what happened. So we don't take trades post 245, but if you're an aggressive trader, trading is a game of probability, and looking at the trend, looking at the consolidation, looking at the trend meter, looking at there's no participation to the downside. Look the okay, you ride along with the trend, and you could have taken another small trade right here, right? So two optional trades. You could have actually taken a small trade based on this candle right here, and you could have taken another trade based on the trend, right? So, but anyways, the trade of the day was this big one. This would have given you enough profits. As you might have seen, the risk is just one candle in every single trade that we take, right? Regardless of what kind of setup it is just one candle, right? And the reward is like multifold reward, right? Same is the case here. Multifold, a small risk, but look at the kind of rewards, right? A small risk here, right? Look at the rewards. So that's exactly the reason why I'm promoting this strategy to a beginner or an intermediate trader, because you might have seen, you might have worked with multiple strategies, but this is kind of like very unique. And hence, if you would like to know more about this particular strategy, right, I have formulated an end-to-end course targeting beginners, right, and intermediate traders as well. It's a private one-to-one session, and I could tailor the contents based on your background or expertise in the stock market, right? So please do visit my other videos, which talks about the course, which talks about which the topics covered in the course, right? And if you're very much interested to get started with stock market and to know the basics, to know the kind of accounts you need to open, the kind of charting platforms you need, right? um, the technical analysis, a complete insight into the technical aspects. That course is going to cover all these topics, right? So please contact me at my WhatsApp number, or drop me a message to my WhatsApp or email ID, right, to get to know more about this course. Like I said, it's going to be a one-to-one private session. It's going to be 6 to 7 hours, and you get 90 charts, right? 90 days worth of charts with clear markings on the entry and exit. You also have the recordings, the video recordings, the chart analysis, right? And with 30 days of post course completion support, you could clarify all your doubts, and you can have answers to all your questions. Then you could actually get started. You could do paper trading for the first 30 days post completion of the course, until you gain that confidence with all your questions answered and doubts clarified. And then you could actually play with real money, like taking small positions, like one or two lots, right? And you can trade based on the signal the strategy gives. So please do contact me if you're interested. And until I see you in another episode of Nifty Chart Analysis, it's bye from me, and take care of you and your loved ones. Thank you.